Hi, friends. Welcome back to the Skinny on Wall Street with us, the Wall Street Skinny. I'm Kristen.
I'm Jen.
And what is today? It's almost May. It's gonna be May. Sorry, I had to do that. So this will probably be airing on May 1st. So we had a GDP print today, which I needed Jen to explain like how it was down, because that was a little confusing to me because like there's like these weird rules related to how it's calculated. So like there's some technicalities. So the markets were not happy about that, but I think it's actually helpful to understand like what was causing that. Now, with that said, even if it was some weird like fluke that it was down, that isn't necessarily because anything bad happened to the economy in the last couple of months, there are some real headwinds into the next year. Where a lot of people are talking about like empty shipping containers. And that's concerning as we start to think about the supply chain and just products. So we'll talk a little bit about that. But the main theme of today is going to be internship advice, because we get so many people asking for tips and advice to essentially turn an internship into a full-time offer. But why don't we start with, what did I say? We're going to start with GDP.
Sure. Yeah. Why not? And again, just a friendly reminder, not an economist. We do like armchair economist stuff here, right? Mm-hmm. Like this is the level of conversation you could have around a dinner table, or like what you need to know to vaguely understand how the markets work. You can go listen to really in-depth podcasts. Our friends at Odd Lots ran one this morning about how exactly like the Bureau of Labor Statistics calculates all their data. Really interesting stuff if you're passionate about economics. I am not. I just kind of like to know, okay, if this goes down, this goes up, this goes up, this goes down, what should it mean? And when something doesn't behave the way it's supposed to, why not? So GDP stands for gross domestic product. And the formula for GDP basically takes into account consumer spending, right? Mm-hmm. Government spending, and net exports. And if you think about it, one of the things that obviously weighs us down a lot is if we import a lot from other countries. So we had our first contraction in growth since 2022, and GDP is backwards looking. So we're recording this on Wednesday, April 30th. These are the numbers for Q1. So just keep in mind that pretty much all economic data is backward looking, except for some of these like confidence surveys and forecasts and inflation expectations. But the number was down because net imports took something like 5 percentage points off of GDP growth. So this was, largely speaking, domestic companies here in the US knowing that tariffs were coming and ramping up imports from other countries where they're going to be more expensive to source in the coming months, right? So when you see all of a sudden the reaction in the markets, it's puzzling to me that the markets had rebounded as much as they had when this should not be a surprise. Mm-hmm. And it shouldn't be a surprise that that is going to continue to drag on GDP in the months to come, even if we are seeing announcements from American companies that they are making big investments in either America or in other countries with lower tariffs than China. That simply takes so long to work through the system. So I expect to see another hit next quarter if nothing else changes for the exact same reasons, if not a more extreme one.
Yeah. Well, I mean, so it was interesting because you had told me that you expected it to be negative, and I was so confused because to me, like this, to your point, would be backward looking. And so I was thinking about it from the perspective of like, but nothing had happened yet. But to your point, there was, again, those American companies that were expecting these tariffs to hit. So they did buy. Now, by the way, the tariffs obviously ended up being a lot worse than what people were expecting, which is going to actually feed into what we're going to talk about next with regards to the shipping issues. But I thought that things would be better because I was like, oh, all these people are buying. Like you and I bought a computer. I had some stuff that I wanted to buy for baby stuff that like I pulled my purchases forward. I know a lot of people that are pulling purchases forward. In fact, I mean, one of the things that, again, actually, this kind of ties into the next topic, so I'll just get there. But as we're looking out to what is coming in the future, the mechanics of just like how companies operate, and if you think about like the supply chain and how you actually have to build up inventory and stuff, like you need to start putting purchase orders in now and actually planning for what's to come in the future. And so people are actually coming out there like, start buying for back to school, start buying for Christmas, right?
Yeah.
Because the companies that are manufacturing, again, in China, which by the way includes a lot of baby gear. So I saw somewhere that like the average parent will probably end up spending $1,000 more on baby stuff just because of the tariffs, like everything is basically manufactured in China, like air conditioning parts. There's a whole bunch of things that are literally manufactured only there. So by the way, try not to have your air conditioning break this summer. Like you're going to be screwed. I'm like, that's like my nightmare. It's like something happening to AC and then like
you do run hot.
Yes. But also, I mean, like, I feel like we're having more extreme heat, right? Like
Yeah, no, I mean, again, this makes me sound so bougie, but we spent our summer in Switzerland and it's illegal to have air conditioning units in new construction builds, right? There's only like a handful of homes you can potentially live in where AC is grandfathered in because they're very concerned about climate impact. And the northernmost countries are being hit the most by climate change. So it is quite warm in Europe, in continental Europe in the summer these days.
Yeah,
especially when there's no air conditioning.
I would not go to Europe for that reason alone in the summer, personally. So I know you've said in the past, like I should come join you in Switzerland. I might be passing on that.
We found a place with air conditioning.
Oh, it's good. But so the point I was trying to make is that I thought that we would see GDP up because all these people are pulling their purchases forward. And you were like, no, that's not really
and
how
consumer spending is up.
Exactly.
Yes. Consumer spending is up.
Yes. So I do think that you'll see actually from a profitability standpoint for a lot of companies in like the first couple of months post,
you'll see a rebound.
You're
most
probably
likely
see a
like
spike.
next quarter. Yeah, exactly. The question is how much is that offset now?
Oh, it's definitely
by again. Also, because the tariffs aren't finalized, and we've got this 90-day pause, right? How many people are like import everything when we can still get it? I just don't know.
Oh, that's a good point. That you'll see a lot of imports from like Nike, for example.
Correct. I just
because they're in Vietnam and there's like a 10% tariff and like the current reciprocal tariff was super high, but it's paused. So it's like basically buy a
lock in 10% while you can, right? Like I just don't know. And again, I'm not a company, but that's what I'd be thinking. I'd be like, let's spend a little more to at least make sure that we can keep the lights on through 2025 or whatever it is. You did a great video today talking about the timeline, obviously, that these companies operate on. So I just don't know how much they can get in. And speaking of imports, by the way, one of the things that both you and I have been talking about and people much smarter than we have been discussing is what's happening now with these container ships. And I forget who it was that I was listening to, but for those of us who are not intimately familiar with how shipping lines work and how goods are shipped around the world, the phrase that they use is you have to think of these ships much more like a train than like a ship, like a cruise ship or whatever. You know what I'm saying?
Yes.
It is extraordinarily expensive to move these things around the world and to park them in ports. You can't.
Yeah.
So like, if they have a schedule, they got to go, right? And if nothing is loaded onto the ship at a given port, it keeps going, right? And so apparently, I wish I had some statistics around this, but the number of these ships without any actual goods on them is exploding higher. But meanwhile, if you look at, I looked at this thing called like vessel tracker. I mean, truly things I never expected to be doing in my life, but you can basically see the concentration of ships in various ports. And looking at the busiest ports in, say, China right now, relative to the busiest ports in America. If you've ever seen those graphs of all the flight trackers, right? All the planes, and you see like the highly concentrated areas, and then you see like Antarctica, right? And you're like, no one's flying, right? Like the contrast is very stark. Yeah. Now, again, there's always been a contrast. So I'm not an expert to judge exactly what that differential should look like, but watched an animation of how that has really changed just in real time over the past few weeks, I guess.
Yeah. Well, people who are way smarter than I am, trade experts who are talking about how there are going to be empty shelves in the near future because so many different companies do rely on manufacturing in China. And so it becomes a problem where they're like, we're going to cancel the shipments. So it's like now if you need to get that little, we talked about those little baby cups, right? They're just not going to be in the stores because I do think a lot of these CEOs are waiting to see what happens. I mean, the thing that to me is a little bit scarier is the small business owner who doesn't have the choice. Like they aren't as big and like it might be again, like a mom and pop and like they need to pay a mortgage. So like they're just going to close down shop altogether. Because again, the cost to shift the manufacturing isn't this thing that just like you wave your hands and it's like, oh, cool, I'm going to, go use that American manufacturer right down the street.
Right.
By the way, part of the problem too is that like we don't necessarily have the labor trained up to do some of the manufacturing. And that's what the CEO of Munchkin said is like, we don't have the fact, like we don't have the specialists who can like do these little like weighted straw type stuff. Like we would need to train, you know what I mean? Like you gotta train the people and you gotta get up. Like there's a whole process that like there's lead time. So it's funny because again, I'm one of those people who I am a just in time everything. I think it's also code word for lazy. I'm not a planner. I am I need this thing now. I'm going to see if I can get it. Like I'll run out to the store, I'll Amazon it, whatever. Like I literally think I bought diapers for my like second and third kids from the hospital. Like I just like went on Amazon, was like, oh, okay, we'll get diapers now. You know, like now I need that. So now we'll buy them. But I'm starting to be like, no, I literally bought onesies. I would have waited to buy onesies for a few more months. Like when the baby comes, it's like, I want to see how big they are. They're big. Like I might not need the 0 to 3 months. Or sorry, I might not need newborns. So
yeah, anyway. The newborn stuff lasts like 5 seconds.
Right. Well, and I mean, oh my gosh. And like this baby, I had a growth scan yesterday and like the baby's like 2 weeks ahead. So we'll see. It's going to be a big ass kid. But anyway, so the thing that was also, I thought very surprising was the market reaction, because again, before today, we were back, like the S&P, the NASDAQ, right? Like equities were back up to where they were pre-April 2nd levels, which to me is like shocking, because if you think about how equities are supposed to trade, they're supposed to trade on the expectation of future earnings. And there is not a single, financial analyst out there that thinks that we are going to have the same projections for revenues for EPS as we had before, especially with the impact on China. I actually think your average investor is just like, oh, tariffs are off, like they're canceled, like they're going to all go away. I think that's actually how people are kind of thinking about this. Like, I don't know. It's so surprising to me. And we were talking together too, because you had mentioned how one of the lots, or no, it was like a tear down that's near you. You're like, the real estate market is going higher, which is shocking. I said I could see new construction. So houses that are already built, like those going at above asking, like that makes complete sense. But the idea that an empty lot or a tear down would be creeping higher, because the cost to build, we know it has to be going up, because where are we getting the lumber from? Like, where are you getting your air conditioning from? Right. That's what's so confusing to me is.
Well, I think what's interesting, the question with the real estate market is this 2008 or is this 2020? And so we've said before, we oftentimes overlearn the lessons of the last crisis.
Yeah.
And it is interesting to me that if you could see the future, right? If you were Back to the Future Part 2 or whatever, and you had the almanac, to me in March of 2020, when everyone was losing their jobs, when it was like, we're going to be locked down for 2 weeks. Who knows if we'll ever go back to an office? Is everyone going to be laid off before the Paycheck Protection, before all the government stimulus?
Yeah.
In those 2 weeks, if you had told me, because there was a moment where the real estate market did come to a screeching halt that nobody ever talks about, but as someone who was on the front lines at the time, like what was happening is people were getting held up at the closing table. So I knew someone who was selling their house at that time, and they were sitting at the closing table, right? The person didn't terminate on the deal, even though everything was happening, everything was shutting down. It felt like the apocalypse. And they said, you need to knock $25,000 off the price or we're not closing today. We don't care.
Wow.
And they did. Because like, they had to, right? Yeah. At the closing table. This wasn't like going under contract. The deal is done. We're literally just signing the paperwork. So there was a time where things felt extremely vulnerable. If you had a crystal ball, you should have gone and bought like every single property, especially in the Southeast, right? Especially in all these markets that subsequently had this big boom. And so if you have the crystal ball and it's okay, actually there's going to be this huge stimulus, there's going to be massive quantitative easing, everyone's going to have a job, everyone's going to be great, spending is going to be through the roof, right? Inflation is going to go higher, but it's going to be inflation that also impacts home prices and things like that. And we talk about which part of the inflation numbers it impacts. Then yeah, you're supposed to go buy up raw land, because sure, it's more expensive to build, but the market bails you out, right? We built a custom home during COVID and it was wildly expensive, but you were supposed to close your eyes and do it 5 times over. And we were like, wow, this hurts at the time, but it was the right trade.
Yeah. But again, I mean, we were talking about this because I was like, none of the things that were COVID make any sense. Because you were like, do you think that maybe there would be some kind of PPP for small business owners?
Some stimulus,
and
right? Like
I was like,
not
it's so
PPP.
Yeah. Or sorry, not PPP, but like some kind of stimulus. And I was like, this is the same administration that has Doge, that is like firing people left and right. Mm-hmm. I don't see the appetite to now start like sending money to people. And on top of that, at the end of the day, like this has to be passed through Congress. Mm-hmm. So it's like, even if you are a Republican, there are some people that are like, this tariff thing is so dumb. Like, this is a self-inflicted wound. Why are we going to make the deficit go up because of something that we could literally stop tomorrow? So when we were talking, my view was like, in a hypothetical world where like China had invaded Taiwan and we don't have a choice and we need to be like, we're not going to be doing trade with China, then it's a different story. But I think if it's just because like these tariffs that we're just like, who's the bigger, badder person?
Well, by the way, like our threat to China if they invaded Taiwan was going to be tariffs, right? Like we've already used the non-hot war threat, right? Like that ship has sailed. So
that's not concerning.
I don't know that it's deterring China at all. I'm not a geopolitical expert. But so I mean, who knows? These tariffs do seem to be continually getting walked back, right? You just had the big automaker carve out and all that stuff. So like, we'll see how many carve outs there end up being.
Well, the thing is, that's the problem with the tariffs, though, is there's going to be carve-outs for specific industries. There's carve-outs for specific companies. The people who don't get the carve-outs are the small business owners who like don't have a direct line of communication with the White House. So I think that that's where it's like the bigger companies will probably be more or less fine. I think it'll be a little bit more expensive again on the margins. Like I do agree eventually, like it'll come down. But again, the smaller businesses, and maybe that's why the stock market's better because like who's in the freaking S&P 500? It's
not small businesses.
Right. So I do wonder if, again, it's because people expect these carve outs and then it just becomes, it's like we talk about non-recurring charges in banking all the time. It's like people care about, okay, well, you had this one blip this year, but then like looking to the next year, you're back on, even if you had lower earnings for say 2025, 2026, you're back up to where you were. So it's again, a non-recurring item. People normalize that out. Yeah, I mean, the thing to me
that at the end of the day remains the most confusing piece of the tariffs that I hope we get an answer to, and I hope it's a great answer, but we hear at times that this is all a negotiating strategy, and that at the end of the day, we're going to end up with where we had no tariffs on these countries. We now have 10% here and 5% here and 20% here and continue a great, healthy trading relationship with them. Okay, that's fine. But like those little tariffs, if we're calling that the big win and the big ultimate end game, that's fine. That is insufficient to solve the budget deficit that we are in. So then the other argument is, no, we are relying on these as real income to solve other problems. So if we are relying on them as real income, then we need them to be very high and we need them to work and we need to continue those trading relationships unabated.
Well, and you brought up actually another good point, which is, again, as we talk about kind of like what's priced into the stock market, you know what's priced into the stock market? The tax cuts that are supposed to be coming. You want to know how we're supposed to pay for part of these tax cuts? The tariffs. Right. And so here's the other thing is that we're going to be getting a politician to come on the podcast at some point in the next couple of months or something to talk about just like basically like how the tax thing gets passed. Because again, my very basic understanding is there's this like reconciliation, like basically you have to show that you have income to pay for any kind of cuts that are made. And so the thing about these tariffs, it's like, okay, if this is a negotiating tactic, then it's not going to give you revenue for say the next 10 years, because again, it's not permanent. So if you were to try to say that you're going to be using some of the revenue from the tariffs to offset some of the cuts that you want to make, whether it's the no tax on tips, blah, 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 like then those tariffs have to be permanent. So that's where it also becomes a little bit tricky because again, like what's priced in the stock market, it's these tax cuts that are going to start going away. And if those go away, that's another thing that's potentially obviously bad for the stock market. So anyway, it's funny. You and I were talking about just when there's so much uncertainty and you were like, that in and of itself is why like the markets theoretically should be down because investors typically hate uncertainty.
Said differently, right? Who's trading right now? If you are like an average Joe person right now, you shouldn't. You really shouldn't be trading.
I've seen that retail investors have been contributing a high percentage of the flows recently. Right.
So it's like who is driving this course correction in the stock market? Who was driving it on the way back up? Was it what we call smart money or was it dumb money? I think that's a very important distinction to make because that creates two very different kind of paths then to what happens if it comes back down, right? If it's big institutional investors who are, trading in a time of illiquidity when everyone else is like, I'll stay out of this, and you have a couple of big guys throwing their weight around and you get gappy moves on that, that's one thing. If it's consistent massive retail flow into the market, new purchases of S&Ps being made, et cetera, et cetera. And then that is really going to impact the average American's wealth on the way back down. That's a different story. And so zero investment advice here. I am not making any discretionary investments whatsoever in a time of so much uncertainty. Because my feeling is always, hey, listen, if things are going to be amazing, I'm okay with missing the first 5, 10, 15 basis points of that move. Like, have at it, right? Because I'm simply not a sophisticated enough investor to be trying to time the market and all these things, right? I want to own more of a broad basket of assets over time, generally speaking, and I'll continue to keep adding like a robot, whether it's down or up, and not get emotional about it. So that's just my personal investment philosophy right now, is that I simply wouldn't do a thing until I have more information.
So anyway, if you are applying for a job or an internship and you want to be able to like talk about what's going on in the markets, that's what's been going on. But getting to the nitty gritty for our younger audience who is about to start on the desk, the main theme of today is internship advice, because we get so many people asking for tips and advice to essentially turn an internship into a full-time offer. So,
well, actually, specifically, what kicked this off was someone reached out to us and said, hey, with all of the volatility in the markets, do you think that summer analyst offers, like internship offers, are going to be rescinded? Give me your thoughts for this summer, next summer, all these things. And I was like, whoa. Let's bring this back down to earth. But I can totally understand that anxiety right now from young people who don't understand the broader framework of how these investment banks and private equity firms and everyone who's doing these intern programs typically operate. I certainly don't have a crystal ball, but the TLDR on this is do not worry. Okay, I was literally sitting on the trading floor at Lehman Brothers when we went bankrupt, and they still kept their summer analyst programs. They still honored all of the offers to incoming analysts and associates. Now, I do remember Morgan Stanley specifically with their like first year analysts in 2008, they offered like a lot of buyouts to them. Basically what these firms do is they overhire and overfire. You are so cheap to them at both the intern and new analyst, new associate level that they'd rather even just like free option you for a few months before they fire you. It really is such a meaningless number to them overall.
And not only that, the relationships that they have with the schools are so sacrosanct, like they don't want to sacrifice that. So that was the other thing I remember.
Zooming out and thinking about how to structure an internship, one of the disservices that the industry has done to itself and how we talk about these things is everyone has been so focused on this very precise timeline to a very precise set of goals. Every single senior thought leader that we talk to bemoans the fact that happy accidents can't happen often enough when you are on that laser focused timeline looking to this specific role. So what I'm directly speaking about is the intense and competitive and very accelerated path to a private equity role at a mega fund, right? That you really have to start preparing for that your freshman year in college. And you need to start with externships and internships basically the second you show up at school. Anything you can do to get your foot in the door anywhere at these firms to demonstrate an interest, whether it be specifically an early internship at a private equity firm or an early internship in an investment banking division of an investment bank, specifically then in a small subset of groups. And all of that funnels into ultimately getting an offer for a job that starts 2 years after you actually graduate from school. That was held up as this lofty ultimate goal that so many people aspired to. But in speaking to so many people who work in senior roles at those firms, they're like, we hate that it is this way. Like it's so insane because that wasn't my path. I didn't get the breadth of knowledge. And by the way, the kids coming up, sure, they're super impressive or whatever, but like actually they burn out after 2 years, or we're disappointed with so many of the kids coming up. It's like, well, you made your bed, now lie in it, right? I actually think as what's happened with the volatility in the markets and where private equity is no longer necessarily this golden goose that just keeps laying eggs the same way that it was in the zero interest rate environment that happened over the past 15 years, call it, before 2022, 2023, 24, 25 now. I think the blessing of that is everything else has become interesting again. New things are becoming interesting. There's so many different roles now that you could work in that are going to give you a breadth of experience that ultimately may lead to a higher payday And even if the role isn't considered as prestigious as this small, tiny subset of roles now, I don't necessarily know that that won't be true 3 or 5 years from now. Mm-hmm. So I think that when people think about structuring internships, one of your goals needs to be not trying to overly gamify the system to achieve what you think as a 17, 18, 19, 20, 21-year-old, the goal should be. It's easy to say, harder to do in practice, right? Because at the end of the day, I do think that so many of you who are competing for these roles are hyper competitive, and you've always wanted to be the best of the best. And you said, whatever the hardest thing is to get, I want that. I don't really know what it is, but somebody says it's the best, I got to have it, right?
Yeah.
And I completely understand that mentality. I would just caution you that just because someone else says something is the best doesn't mean that it is the best for you, and doesn't mean that's where you're going to make the most money, be the happiest, or have the longest career. Yeah. So, I mean, I have personally experienced this so many times in life, not necessarily just with respect to my career, but like, oh, I want this thing just because somebody said I can't have it, or I have to do like, or it's hard to get, therefore I'm going to go for it and I'm going to prove you all wrong. And then you get it, and all of a sudden, like there's no ultimate joy in it, and it's not the right thing for you just because again, it was the shiny thing that everybody else wanted. So I would caution against that mentality. But so backing up, let's start with kind of the overall framework for internships, because also the timeline has changed so much relative to when we experienced it. So there were no sophomore year internships when I was in college, or if there were, they were very few and far between, and they were more likely structured as what we call externships. So first of all, let's define internship versus externship. An internship is where you actually work for the firm, right? You were brought on as an employee for a period of time. You are paid a salary. Like, you need to go through compliance training. Like, you report to their HR, all this fun stuff. Yeah. Think of an externship as like, I'm going to show up here every day, and like, you can't tell me to leave, but like, this isn't a meaningful source of compensation. You're not really formally on the books, most likely. This is just hey, I'm going to come sit and observe what you guys are doing and try to be a part of the action. But like, I'm not going to be subject to the same rules and regulations as everyone else, meaning it's probably more hands off. You're probably doing much less. And that's why it's a great point of entry for people who are a little bit younger and earlier on, just trying to figure things out. We see kids as young as high schoolers. A lot of high schoolers, especially at private schools, have senior projects where they're told to do something for a week. And if you've got a neighbor, a friend, an acquaintance, a relative, somebody in your circle who works either at an investment bank or at an asset manager or at a hedge fund or private equity firm, a lot of kids are now using those as opportunities to actually get something on their resume before they even start in college, even if it's just a week, trying to observe and understand what these people are doing in their day-to-day jobs. So that's what an externship looks like, and that was kind of the origin of it. Yeah, go ahead.
Well, I was going to say, I mean, and the beauty of that is it just gives you a line item on your resume. And I've talked about this before, that like my background, I did not have an internship. And after I basically got hosed trying to apply as a senior without any internships, I was like, all right, the thing I need to do is I need to get that line item on my resume. So I was able to get a job at like a local Morgan Stanley. And I was it was like basically kind of like what this externship sounds like. I was like, writing the names of addresses on envelopes. But because the next year I then had that line item that said Morgan Stanley, people didn't really even notice that it said freaking Providence, Rhode Island. They were just like, oh, you had an internship at Morgan Stanley. Check. So that's the beauty with the externship. It is literally getting the name on your resume so that when you're going to apply as a sophomore, right, they see that and it shows the interest. And one last little point, because people all the time say, oh, I don't go to a target school, like blah, 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 blah. Honestly, if it was me and I was trying to apply for something, I would much rather have that externship and get my foot in the door as like a freshman, sophomore. You have a better shot of getting a job at, say, a Goldman Sachs than a Princeton senior who doesn't have the job. So I just want to make that point that these externships, they're kind of like fluff a little bit, but it's literally just the name on the resume. And like, that is gold.
Well, and to your point, you have a story to tell. Mm-hmm. And that's what ultimately someone looking at your resume and hopefully interviewing wants. They want a narrative about why you want it, and they want that to be visible on paper, and you need to be able to support that narrative. Yeah. So even if your externship was Kristen stuffing envelopes or whatever it is, or creepily sitting behind someone while they do their job and trying to ask them questions at odd intervals or whatever it is, you have enough material then to form an opinion, to form a dialogue, and to form a narrative about what interested you about that. And a lot of people are just straight up lying. They'll be like, oh my gosh, I learned so much. I was part of this deal. We all know you weren't part of the deal. Okay. We all know that like you weren't. But when you can tell that story and you can speak to specifics that actually went down and things like that, it is so powerful in terms of demonstrating that interest. So back to kind of how things have changed.
Yeah.
So sophomore summer things didn't exist. Now, some banks do have, and some banks and private equity firms and blah, blah. Like when I say bank, we're just short code for everyone in finance. Okay. Some people have very formal programs starting as early as sophomore year. A very small handful have actual programs for freshmen. They may be kind of group oriented. So it may be, hey, come for a 3-day women's thing or athletes, whatever it may be. Find some group that you can plunk yourself into, okay, if you can, and get access to these things. Sometimes it's you structure your own program by leveraging the network within your alumni community or your actual like network of people you know. Yeah. The number of times that we now talk to students and they're like, oh, well, my parents aren't in finance, but my roommate's dad is, and my roommate wants nothing to do with it. They want to go paint for a summer. And their mom, who's an MD so-and-so, is like, oh my God, please, you'll come shadow me for a week or whatever it is, right? So please don't be shy about leveraging that network and reaching out to alums. They want to have these conversations with you, but like it's got to. We have a whole networking 101 episode. Like, you know, you need to be thoughtful about these conversations. But like, basically, freshman year and sophomore year, if it doesn't exist, make it yourself. But then, what's so different about what our experience was like was all internships effectively happened your junior summer when we were coming up through college. You would apply for those typically in like the winter, maybe spring of your junior year. That's how it used to be. Now, what we're seeing is that in order to apply for an internship that takes place your junior summer, the applications for those internships open potentially as early as January of your sophomore year.
Right.
So basically, you could apply anywhere from, call it January of 2025 through, call it April of 2026 for an internship that will happen in June of 2026.
Right.
So that cycle has become kind of this rolling, call it, 16, 18 month process. Whereas it used to be very concentrated and everyone was kind of on the same schedule and it happened your junior year. Now you need to be preparing for those junior year internships your sophomore year. And sometimes even earlier, again, planting those seeds if you want to have a sophomore summer internship, right? So you may need to be preparing for things your freshman year. Yeah. It's totally different than it used to be.
Well, I know it's oftentimes, especially for the firms, they'll be like, oh, we had this great sophomore intern, but they've already accepted their junior year thing, So it's wild to me. And this goes back, and this is what we've talked about before with like, there's no more happy accidents. And I mean, you see it all the way through with private equity firms who are literally recruiting kids who haven't even started on the desk. And honestly, like, might not even be good. That's the whole thing that's so wild, is it's like you're basically just looking at their resume and everything. Like, I was a terrible analyst. Like, I just need to come out and say this. I sucked. On paper, though, I looked great, So it's like you have no freaking clue if someone's going to actually be good. And so it's so stupid. That's all.
Yeah. So oftentimes as a result of this, like you said, Kristen, you'll go into your sophomore year internship already having a junior year internship lined up somewhere else.
Yeah.
Now, the whole goal theoretically of any internship is to get a return offer, right? Either for the following summer or a full-time return offer.
Yeah.
But you're not going to get a full-time return offer after your summer internship as a sophomore. You're just not.
No.
Because the level of responsibility, the level of maturity, it would be extremely rare for that.
And I just want to reinforce that because I think it gets a little confusing because we're talking about so many things. So look, we're saying sophomore year, you might go in and already have the junior year internship, but the junior year internship, that is the trial period for the full-time offer. Like that is where—
What's confusing is what happens if you want to work for the place you worked as a sophomore. What if you go and love it? and you've already got this other internship lined up. And they're like, hey, why don't you come back next summer? And you're like, I've already accepted this thing somewhere else. But like, can I call you in 2 years or call you if that doesn't work out? Like, that's what's so messed up, right?
Yeah.
And that's oftentimes why those who want to be on the private equity track do a private equity summer internship their sophomore year, then a junior year investment banking internship. So they've built a relationship already with one private equity firm. They go have their junior year investment banking internship in hopes of getting a full-time return offer to go back there after they graduate. But they keep that line of communication open with the private equity firm, who then theoretically, once they have accepted their full-time investment banking offer, will give them an offer to come work for them 2 years hence after they have completed their 2 years basically of training.
Well, after assuming they do a crazy little interview process, but yes.
I mean, the levels of nuance and insanity that has come to this process. But so the internship itself, again, it's going to vary based on which division you end up in. If you accept an offer in a sales and trading internship, it probably looks a lot different than an investment banking proper summer internship. So I can speak to what sales and trading internships look like much better than investment banking internships. I'll let you take those a little bit, Kristen. So sales and trading internships tend to be rotational. And the reason that they are, right, is there's so many different desks. Sometimes you might actually have a rotation across both fixed income and equities. Sometimes you'll be in just one division of the bank. It really depends on how the bank is set up. Now, again, when we were going through this process, I was a fixed income summer analyst at Morgan Stanley. I was truly the world's worst summer analyst, like bar none. They would ask you at the beginning of the summer to kind of rank some of the desks that you wanted to try to rotate with. I truly didn't know what any of these people did, so I had no idea how to rank them. And somebody was like, oh, credit and like loans is really more like story-based than something like interest rates, like where it's all just the markets or whatever. I was like, I don't know what markets are, but I know what a story is. Yeah. So I prioritized all of the desks that were like bank loans and things like that for the desks that I wanted to intern with. It turned out to be the exact opposite of what I actually wanted. So my ignorance led me to prioritize desks that I didn't ultimately weren't a fit. But I think that just as easily, your hubris could lead you to prioritize desks that aren't a fit for you as well, given you've never actually worked on these desks, just based on what you know about them and based on what the traditional exit opportunities are.
Well, and I want to just echo, I had the exact same experience because I was coming as an engineer. And so it was like, oh, you would be good at CDOs. It was honestly like the worst.
Well, structuring specifically.
Yeah, structuring. Like I was like, this is.
You weren't doing trading.
Right. And actually, had I had any inkling about anything, I would have definitely been much more of like a banking path. By the way, and I applied to sales and trading. I thought I wanted sales and trading partially because Jen told me it was cooler. But so I really wanted sales and trading. Like that was the cool place to go, right? And banking, it was like monkey business. Like who wants that? But for me, like the stories, the learning a tangible skill, understanding accounting and financial modeling and like learning Excel, like that actually is really what I got excited about. And when I then had to go into like the CDO structure, it was like, this sucks. And this is why internships are so great because you can learn what you should or should not be doing. And if you basically just start as a full-time, you don't have the opportunity to basically move around. I got lucky because the world collapsed so that I was able to move out of CEOs after like just a couple of months. But I mean, yeah, it's really hard, I think, because when you learn about some of this stuff, you're like, this seems so cool. But then when you actually do it, you're like, no, this isn't really for me. Although I will say, when I was initially thinking sales and trading, I still really like the whole macro picture. That's why I initially thought sales and trading was right for me. But because of my engineering background, they stuck me in a CDO structuring role. I actually do wonder if I would have enjoyed more of a market-based role. The one problem is we talk about all the time. I call it like I have eyebrow blindness for details. That's why I'm a horrible analyst. I mean, like I'm very good at creating things and projects and like understanding big picture and all that. But I suck at the details, which is like, you kind of have to be really detail oriented if you're like a trader. And actually, if you're a banker too.
If you're a banker, yeah.
So that's why I was like awful.
That's why
it was so bad.
Bank.
It's actually funny. We're like doing these courses and I will, do the whole thing. And then I have Jen look at it at the end and she's like, oh, okay, Kristen, like that's cute how you spelled Swedish. But so anyway, sorry, continue. So yeah.
No, 100%. So we get asked daily by people on our social media and people on email, what are the best groups? Which are the ones I should be in, right? Here is my ultimate goal. And by the way, we'll get something like this from somebody who has an internship in equity sales and trading. And they're like, I want to be in private equity. What's the best group for this? The bottom line is then you're in the wrong internship on paper for that. What are you interested in learning about the most? Because when you're already not on the most direct path, then go learn about something that truly interests you and then tell your own story and figure out if private equity is still like what you want to be in, right? But like, you got to make the most of the internship you have and be realistic. But like, there are very specific paths for that one thing. For private equity deal teams, right? Everything else can be a little bit more circuitous, quite frankly. Very few other careers have that really set specific time frame. And to be honest, I think we'd actually have much better private equity investors if we took people with more diversity of background as far as what they are experts in. But I digress.
Yeah. I mean, I think one of the things that would be helpful is if we also just talk about like, what are the things that people can do to like make sure they get that return offer? Because you have great advice on that.
Well, yeah. So, I mean, again, so it's a rotational program. So you're going to sit with a number of different desks. So the first thing is to try to at least identify desks that you are going to be interested in. But the reality is there's probably going to be a couple of desks that everyone wants to be on for whatever reason. And that's typically a function of two things. One, market cycles. So what's the hot thing right now? Is it interest rates? Is it credit? Is it FX? You know, if you're going through fixed income, or if it's investment banking, is it, oh my God, everyone wants to be, if you're in, you know, an industry group, on the tech group, or everybody really wants to be on the M&A desk, or everyone really wants to be in financial sponsors? Or is it like, no, now the PE secondaries desk, like they couldn't get an intern if they tried 5 years ago, and now everyone wants to be in one of those roles. So things can go hot and cold. But the other thing is also the reputation of that desk within the firm as far as the culture of that desk. And culture is one of those things where like, dude, you hear people say this in interviews and your eyes glaze over because you're like, I know I'm supposed to say something about this, but I really don't care. Culture is just whoever is going to pay me the most and give me the best options and whatever. And then you spend 5 minutes on a desk and you're like, culture is literally everything. I could be trading widgets all day long, but oh my God, this is a terrible manager or this is a great manager. And that determines 99.9% of your outcome. So there will be desks that have a reputation of like, oh, you want to go work for him or her. Like that is a training ground for the rock stars. Anyone who's in the firm has come through that group. And you're going to be like, anyone who's ever in the firm has come from like, whatever it is, convertibles origination? Like what?
By the way, like converts, I mean, that's where like Vikram Pandit came from. I'm pretty sure that's where Ted Pick worked at one point. The head of ECM right now was my associate in converts. Like, so it's funny how converts like didn't really have like the best reputation for going to work there, but like it actually spit out people that like became very senior and were like wildly successful. So
I'm just using your personal
100%.
example. Yeah.
But I will say this is Morgan Stanley specific. I have no insight as to other firms. I could just tell you at Morgan Stanley, like when I was there, it was known the groups you wanted to be in, it was financial sponsors, partially because again of the private equity pipeline, but also just because the reputation of the senior people was the best. They weren't going to like work you to the bone. Global power and utilities, people loved that. There will be specific groups that even if like the products might not sound that exciting, you're still getting the core foundational kind of like banking understanding while also working for people who are like not going to make your life miserable, which I think
and it's not just about not making your life miserable. It's also about how much political power does that group have within the bank? And political power is not necessarily directly tied to revenue. There can be groups that you're like, I don't know what deal they signed with the devil, but like that group is so politically powerful because if you have someone who's in that group, who's got your back, who's lobbying for you, mentoring you and advocating for you, that is worth its weight in gold. That will get you paid, promoted, and it will make you happy. So like all these things are really difficult to know coming in as an intern, but you can start to suss them out very quickly, certainly during the first few weeks, if not during training, right? And that's something we didn't really touch on, but like at the beginning of your internship, you will go through some kind of training program. Quick plug, we actually have formal training programs for your interns. So if you are a firm who's looking to train up your interns, you can literally drop them into our talent accelerator and they can train virtually and be ready to hit the desk running without having that downtime of sitting through training before they actually hit the desk. So huge plug. But anyways, you're going to go through training together and then you're going to land on the desk. And what your role looks like once you hit that desk is going to vary so much. So we can't tell you exactly what it's going to look like. Here's what I can tell you though. you might run into. Let's say you're on a trading or a sales desk and things are going absolutely crazy. You might not actually have like a desk to sit at, right? You might be on a big trading floor and every single seat is occupied. You're not going to have like a computer assigned to you, whatever. You might get like a laptop for the summer or something like that, but you will be sadly carrying around either like one of those big ergonomic chairs or a folding chair and be sitting behind people. Now, if you're really lucky, you might get a desk and a computer and like a home base to call your own, but don't count on it. Okay. Yeah. That may be different in investment banking where like it's more cubicle oriented.
It depends. I mean, so much of it depends on like kind of literally the office space and like how at capacity they are. I mean, so many firms, it's so varied. Like if they just moved into a big new space and there's tons of extra office space, great, you got a chair, right? Yeah. If they're basically at capacity and they're supposed to move in the next couple of months, but like right now there's no, like you're going to be maybe sitting in like a conference room where by the way, you're going to get kicked out when they need to have a meeting with the CEO of XYZ firm. So yeah, it really varies.
And also like fun fact, like not to digress, but actually like desk assignment switching just for two people to trade seats on the trading floor is literally like, it costs tens of thousands of dollars. Like it has to be run through so many layers of management. So like the idea that you would get a seat for 10 weeks, either A, they have like low head count and there's just like an empty desk because they fired someone or someone quit or whatever it is. Or more likely B, it's you just won't have one because they don't have the budget for that. And like it literally costs more than they pay you for the whole summer just to have you have like a computer and, you know, a keyboard. But anyways, so your role on each individual desk will differ. And more specifically, the way in which you are evaluated will differ. So best case scenario, the dream scenario as a summer intern is you go sit with a desk for whether it's, you know, the totality of the summer or for a couple of weeks, and you are given a final project or you are given some way that you can have a concrete demonstration of what you've learned and the skills that you've acquired. Worst case scenario is you go to a desk that's super busy. No one has time for you. You're in a folding chair behind someone who is frantically working for 12 hours straight, does not have the time nor energy to talk to you. So that's literally like the gamut of the experience. There's also a third option that no one ever talks about a lot, but that happened to me, where I did my first rotation of my summer internship with a desk that was totally sleepy, had nothing going on, but didn't have anyone junior enough who was interested in kind of sitting with me, training me, talking to me, anything like that. Now, that could also be a function of the fact that I didn't know what questions to ask. I was so used to coming from a very structured academic environment where it was like, here's the assignments, here are the tests. Now go perform within this rubric, right? I literally showed up every day and I would ask for things to do because I was like, oh, I should ask for tasks and I should go complete that task and be like, can you update our address book? So I did my one task, day one. And then that was it. I think I reformatted some PowerPoint slides at one point, but at no time during my rotation with that first desk did anyone more junior than a VP, because the most junior person on the desk was a VP. That VP did nothing all day as far as I could tell, but like also had no interest in training me or explaining to me how bank loans worked, like why anyone who's dealing with bank loans sits on the fixed income. To this day, bank loans are still kind of like a gray spot in my knowledge because I'm like, what do they do all day? But so anyways, in the event that you are not given truly an overwhelming amount of tasks to complete and a final project with which to demonstrate your ability, you come up with it. You need to take the initiative and make your own internship. That's the missing piece of advice that I wish I had had. I wish I had made the assignment for myself to go find out what the most interesting deals happening in the bank loan space were. Are bank loans distressed? Is there a glut of bank loans? Are interest rates rising and falling on bank loans? I should have been the bank loan expert after 2 weeks and should have had so much to say and should have made my own presentation. And here are my thoughts on bank loans.
To cut you a little slack, nowadays, that is so easy to do. Between podcasts, between YouTube, between the sort of wealth of knowledge. I mean, like even our little podcast, right? You can go back and you can like literally find an episode where it's like, oh,
search bank loans, you'll hear this.
Yeah. But there is no excuse for people now. That's what I'm trying to say. There is no excuse because there is so much knowledge out there that like you have to actively try to not find it. if you are on a bank loan desk, like, yes, you should become a little mini expert in bank loans. And it might not be from literally working, like doing an actual project. You should be learning about it. And then you can maybe like talk to the person like, hey,
but that's the thing. If you come up with the project, then you'll have the questions, right? Because I didn't have a task that then ultimately you would hit a roadblock in, right? Like, hey, I don't know, what am I going to put on slide 3 of my bank loan extraordinaire PowerPoint slide or whatever, right? I could have turned around to the VP and said, hey, this afternoon, if you're not doing anything after 3 p.m., even though, again, as far as I could tell, he wasn't doing anything after 8 a.m., like, maybe you can help me answer these questions that have come up in my bank loan extraordinaire circus here. So make your own tasks if you are not given them. Most desks have some kind of formal structure nowadays because the internship is just, it's so much more evolved. We've got 20 years under our belt since I did my internship. It's become such a standard part of the process. But the bottom line is that even if that desk was by no means a fit and I had nothing to do, couldn't come up with a project, couldn't come up with a conversation, I sure as heck should have stood up, walked around the trading floor and found someone who'd be willing to talk to me and found a desk that seemed interesting, right? Like there are so many things that I did wrong now in retrospect. I should have been talking to my other interns, asking about the desk that they were on. Oh, like you seem so busy all the time. You're here till 9 p.m. I literally haven't had anything to do since 10 a.m. on my first day. Like, what else can I be doing? Can I come sit with you guys for a day? Like, do you have extra space? Blah, 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 blah.
Everything you said, 100%. And then the other little just wrinkle to throw in there, but the social skills and ability to interact with other humans, like that is one of the most important things. So you could be the best person and have the best presentation and all that stuff. But if you cannot interact with other people, if you are not forming relationships, if you are going up to people and bothering them, like you're not going to get the return offer. So yes, you want to be a rock star on just figuring out how to like show that you care, show that you want to learn, show that you're motivated, a hard worker, but also have a little bit of, again, the social skills to, as you network, do it in the right way. And again, this is another plug you can go back and listen to. We have 2 episodes related to networking. We have Networking 101, which was the me and Jen episode. And then we have the founder and CEO of ProSec Partners, which is, again, a like mega reputation management firm. And she had some really awesome advice there. So we'll link both of those in the show notes. But the way that you present yourself as a human being to other human beings is essential.
100%. Just to be very clear on the specifics of what you're talking about, Kristen, literally things like remembering people's names after you've met them. Writing emails according to basic rules of etiquette. We're not talking about you need to be the most socially adept person. God knows neither one of us is. But like you need to pick up on basic cues. You need to demonstrate enthusiasm and curiosity. You do need to show up first and leave last. You do need to show that you want this job more than anyone else. Even if you don't ultimately want to work on the desk to which you've been assigned, you sure as hell better fake like you do. Because you are asking these people to make an investment of their time and energy to teach you while you are there. And you never know. The thing you thought you weren't interested in or the thing that wasn't like the super sexy desk might ultimately be the best fit for you. So don't write it off and don't have an attitude like you're too good to be there. So listen, at the end of the day, right, you are an intern and yes, you are getting paid, but let's be real. You're not actually making a huge, meaningful contribution to the desk. You are basically getting paid to learn from the people on the desk. So if you're going to ask them to take time away from their job that they are getting compensated to do, right, that like their entire career hinges on to teach you and train you, you need to treat them with grace and respect. And so like in terms of concrete things, what that means is you're going to have questions, right? You need to read the room and know when an appropriate time is to ask those questions. That sounds like a really simple thing, right? But if you see someone who's like on 2 phones and who is like typing away furiously and looks really stressed, that's not the time to be like, hey, so I was wondering if you could explain to me like how to build a discounted cash flow model. Like maybe, you know, think about a different time to ask that question. And don't ask questions one by one as they pop into your head, right? Rather, write them all down. Do as much as you can to try to answer those questions on your own with the resources available to you, which to your point, Kristen, are more plentiful than ever. And then present a really thoughtful final list of questions to the person who is tasked with training you or whom you've identified as like, hey, this person seems to be the nicest person on the desk or the least busy or the most junior or whatever it is. Then you can sit down and be like, I've consolidated it into this list of 6 questions. Based on all of the work I've done, I think I understand X, Y, Z, but I just can't figure out how that then translates into ABC. Could you help me walk through it? Or when I was sitting behind you earlier, I heard you talking to your client and you said these 3 things. I understand that this means that, this other thing means that other thing, but like there's this one thing that I just really couldn't figure out what it meant. Can you explain it to me? And it's the same rule that my kid had in his 2nd grade classroom. Try 3 before me. Try 3 different sources to come up with an answer before you ask the managing director.
Yeah.
These are just common sense things, but this is what kids are whiffing on.
Well, I mean, it's so funny because you had put out a video. It was like a reel on getting coffee, or it wasn't even on getting coffee. It was like, instead of being the intern that's sort of like, I'm here to ask you about bond math. It's like, maybe you go to Starbucks, you get a coffee, you then have something and you hand it like, hey, so I got you this. And it's these gestures, right? It's having the social awareness to be like, let me do this thing for you, because that's part of the thing too, is this like give and take. And that's, we talk about this with networking, where it's not, you're always taking. It's like, you want to be like showing that you can add value. And in some cases, like that's how you add value is like your VP like can't get off the desk. So like, that's something you can do. And the pushback, which is like, that's so demeaning, like never get coffee, blah, 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 blah. And I think that while yes, you don't want to be like your only job is getting coffee, and there can be situations where it maybe historically was demeaning. So much of it is the intention, right? So much of everything is just like, are you being hazed in a way that we saw with Yaz in industry? She's going to get the salads and like Kenny is being awful to her about like, you didn't get my croutons. Like that is hazing. But if it's, again, you're going to get a coffee because you're trying to show value. And also the person is taking time out of their day to teach you this stuff. Like the random VP, that's not necessarily their job. So it's just showing respect for other human beings. I mean, and it actually goes back to this conversation we've had a lot as well, which is about just like drinking culture and people being like, I would never drink and blah, blah, blah. And the binge drinking culture, that is not good. You should never be hazed to drink. At the same time, going out and socializing with your coworkers, that should be part of your job. You should be forming relationships, right? Because the people that you are meeting are the people that, by the way, one day might be your biggest advocate. And so if you can show that you not only are really bright, but you have the social awareness and you can basically show your value that way, like people get so focused on the technicals, like honestly, AI is going to be able to do a lot of the technicals pretty soon.
Yep.
So it is the social awareness that you bring to the table and the being able to read a room and have a connection with people. And again, like caring about other people, like it's people at the end of the day that make the big difference. So I just wanted to make that point that yes, maybe getting your freaking boss a cup of coffee because it's like maybe the nice thing to do. Like your boss might go get you a cup of coffee one day because they might just be out and be like, hey, I got coffee for the whole desk. So
yes.
Anyway, that's my little rant on that.
The coffee thing, I love that. And it's funny because that Yaz scene actually rubs both ways because coffee really symbolizes a way to add value in lieu of being able to add value in any other way, or before you can be trusted to add value in a high stakes environment.
Yeah.
And so the whole thing is, if you can't get the coffee order right, how on earth can I trust you when billions of dollars are on the line? And with Yaz, I remember watching, we're talking about industry. Yes, we have a companion podcast. Yes, it's amazing. Yes, it's coming back. We promise.
Yes.
But Yaz sucked at doing the lunch orders. She would go physically to the salad place. She would like order all the salads, stack them up, forget to get utensils,
not get a bag,
order online and go pick up, get a bag, right? Like little attention to detail things. So I always wondered if actually the showrunners were trying to show that she sucks at the salad order, right? You get the salad order done once, you do right. You never have to do it again, right? Everybody gets their own lunch. So like, you need to prove that you can excel in the lowest stakes way first before being trusted. Because again, we talk about all the interview process and all the screening and blah, blah, blah. They don't know. They don't know if you're going to be good, right? Like, oh, you got this brain teaser right. Like getting a brain teaser right does not a billionaire make. So it doesn't mean that you're not going to totally choke or screw something up or God forbid lie if you get something wrong. So like, it is just such a common sense thing to test you in low stakes ways when there really are no other ways to test you that are as efficient. And so the blowback on the coffee thing, 100%. You may never be asked to get coffee, but that brings me to another point about coffee is coffee chats. So this is something that has become this dreaded, unspoken piece of the puzzle. So I want to talk about the coffee chat. So basically, we talked about like this formal rotation program. Like you'll go through various desks. They'll be ranking you as you're ranking them, right? Yeah. So each desk is going to be saying, we want this intern to come back full time. And typically there's like 3 interns that like every desk wants, and they have their pick of it. And there's going to be 3 desks that everyone wants to be on, right? And then the rest of it is, okay, they've probably hired more interns than they have spots for. They didn't used to do that. It used to be like they hired only as many interns as they needed. And then you had to truly suck, like I did, to be not given. And to be fair, I actually was given a, like, if you want to, you can go work in this Westchester office, like, which I did not want to do. But like, I was given the consolation prize offer. I was like, still kind of given a like, well, if you really want to. And I was like, it's okay. We're good. But it used to be, it was your offer to lose. Now it is not. Now we're talking about the bulge bracket investment banks and like the big private equity shops. If you go and intern at a place that only has 4 summer interns, you might all be eligible for a return offer. But if you're interning in one of these big 150 person summer analyst programs, they're going to hire more people for the summer than they need full time. So they will choose the best of the summer and make sure that every desk who needs someone is guaranteed someone full time. But then remember, there's a lot of wood to chop between, call it August of your junior summer and May or June of the following year. People leave. There's always attrition. Someone gets fired. Someone quits, right? So the desks may develop incremental hiring need. And that's when that full-time cycle starts again, your senior fall. If you either didn't get an offer you liked, want to try and shop your offer if you think you can get something better, or miss the whole thing altogether and now you're scrambling your senior year to try to get a job, which is where Kristen was.
That's me. Yeah.
So the coffee chat. So everyone's going to be ranking you. You're going to be ranking everyone, right? But like, let's say you didn't get to rotate through the hottest desk or whatever, right? That's not on your rotation schedule, or it's not first on your rotation schedule. That doesn't mean that you shouldn't be liaising with and building relationships with people on all the different desks. Because at the end of the day, an internship and getting a return offer is a little bit like a popularity contest. You need to have broad-based support across various desks, because all of that feedback will be solicited by the hiring managers, and they'll want to know, hey, guess what? Like 3 different desks rank this one analyst really high. They're getting a return offer. It might not be the desk that they wanted or whatever, but they are getting a return offer. If no desk ranks you first, then it's going to be really hard to justify being like, well, maybe we should just keep them and put them somewhere. So coffee chats are a way to broaden your base of support and maybe even build relationships with people in other areas of the firm that may come in handy later. Let's say, for example, that you are like this person who messaged us who's got their equities summer internship. Most of these investment banks are all in the same building, right? So the people on the investment banking floor, the people on the fixed income floor, if you don't want to necessarily be in equities and you want to explore these other things, reach out to someone and say, hey, listen, you were an alum from my school. I'm 3 floors down from you on the equities floor. I see that you're in the financial sponsors group. I know you've got summer interns and you must be super busy, but want to grab coffee at some point and just talk about like what your path was like through the investment bank? I saw that you came from the equities division and transferred, right? Like, I mean, guys, it's not that hard, but it is that hard because you have to, it's this weird artificial thing of like, you know, like I never did online dating, but it's like, you have to be like, hello, like I'm currently in a relationship with someone else. I would like to meet you for a date and decide if when I break up with this person, maybe you would like to date me, right? Like that's kind of what it is.
Well, I was going to say, and I think that to the extent that you can also take advantage of those social events, which I just mentioned, like going out to social events. I've said this before in past episodes. I moved 4 times in 3 years. And the way that I did that, part of it was, again, because of like market forces and shit, but I still had to like actually interview and be accepted into different roles. So I had to.
And let me be very clear. We spoke to someone else who was in your analyst class effectively at Morgan Stanley, who was like, you know, I asked to move divisions within the bank after my first year and they fired me, you know, like, so
well, in fairness, again, my group blew up. So it was a little bit, well, that's actually a good point. It's a little bit different, but whatever.
Not everyone gets to move around, Kristen. It was your deft networking that.
Well, but that's the whole thing is, so when I was in training, like I happen to be a pretty social person. I like meeting people. I like going out. I like talking to people. So I developed, again, a number of really good friends who I stayed very close with. So when I needed to move, I would call up my friend Phil and he'd be like, hey, we need a new analyst because, so-and-so didn't get their H-1B visa. True story. Like that was a huge problem. But, so I was able to network and I tried to get an offer, but then they had a hiring freeze. That was a whole different thing. Or I went out to a social event and I met the VP who we actually had on. Actually, now he's like a principal at a healthcare-focused private equity firm. But at the time, he was a VP who we happened to have a connection because he was an engineering major and I was an engineering major. And again, he was just like a nice social person. So we like made that connection. So then again, that first group didn't work out because they couldn't get over the hiring freeze. I was able to reach out to him. And so it became this whole thing where like the more people you are able to meet, whether it is because of the training program, which again, they do a really good job to try to have you guys mingle and, get to know each other because those relationships really are invaluable. But also going to a social event and meeting someone who happens to be at this networking event for the firm, that also is a really good opportunity. And again, we put out some video on like the drinking thing and I was,
you don't have to drink alcohol.
True.
Things.
Yes.
When I was a summer intern, I was only 20 years old. I wasn't legal to drink. And I was terrified that this was like an HR test. So when you're a summer intern, there's way more networking events than there are when you're a full-time. So like there is something every single week because what they're trying to do is give you, but like, fine, go, don't drink. It's okay. No one cares.
Sorry. Let me be very clear. This is actually merging with a conversation from somebody else who had reached out to us who said, like, we are finding that our analysts are not going to networking events that we are doing. And I don't know if it's because there's no longer the hook of the alcohol, which used to be a big thing, like the free alcohol. People were like, oh, open bar, I'm going to XYZ thing. And now it's like, I don't really care. I'm going to go home and I'm going to hang out with my friends. I'm going to scroll on TikTok. I'm not going to socialize outside of work. But again, the relation, I'm sounding like a broken record, but like the relationship that you make, whether it is going to benefit you in the short term or going to benefit you in the long term, or it's just literally another human being that you're friends with who is enriching your life. Like, I'm sorry. Social is so important. Like, anyway, end of rant. Back to what you were talking about, because I just get very heated about this.
No, you're fine. And again, I think it's a very important distinction that needs to be made that, listen, like these jobs actually do pay a lot, relatively speaking, as summer internships. But like, this is not some transactional thing where you are there giving them whatever it is, $10,000, $20,000 worth of work, and they are paying you in return for that. This is truly all of these investment banks and private equity firms could make these internships unpaid from one second to the next. And I sincerely doubt that they would see any meaningful change. I think that, to be honest, they have preserved the pay structure of these to democratize access to people who otherwise simply would not be in a position to access these summer internships. But the reality is the vast, vast, vast majority of kids who are applying for these internships are not doing it for the money. Don't kid yourself and think that this is, oh, well, I'm doing this work and I'm getting paid for it. This is an opportunity to quite literally launch your entire career, and you need to treat it as this sacrosanct thing where like you should be so lucky to be there. If you don't have that attitude and you have an attitude of entitlement and, well, this is what I'm being paid to do, these are the hours that I'm being paid to work, and anything above and beyond that is overtime or whatever it is, you're not going to last 5 seconds in the industry. I mean, at this point, guys, you know us, we're like 155 episodes deep. And I'm not saying that in a derogatory way. It's just simply not the culture of.
Well, I think that there is a difference between doing something for an hourly wage where it's like, I did this. Honestly, then maybe you'd be a good lawyer where it's like billable hours. There are billable hour types of roles that are very high paying. It's literally, I did this amount of work. I can bill this. Whereas it's a different model in the finance world.
Yep, 100%. All right, so we've covered the basics of rotation, and let's get some specifics out there. So if, for example, you are interested in one day going into a role in private credit, but you have an internship in sales and trading, it would probably behoove you to try to prioritize rotations through some kind of credit desks, whether it be credit research, whether it be credit trading, either cash, derivatives, likely both these days, high yield, investment grade.
And then that's if you're in the sales and trading side, which again, you can get, this is one of the beauty of private credit is it doesn't have this very prescriptive path, the way that say like a private equity role does. So you can come from sales and trading. You can come from debt capital markets. Again,
research.
Research, right. There's a much wider range of potential starting places that will get you to that path. So you don't have to have known, when you were at that sophomore and you were trying to get that, freshman. And that's the beauty of, by the way, most roles, guys. Like, if you want to work at a hedge fund, you can obviously start on the sales and trading side. You can also start on the investment banking side, right? There's so many roles. It's really just private equity that it's like you need to have this very prescriptive path. And again, I mean, I'm kind of curious to see, like, that might fall out of favor. By the way, it might get easier to get those jobs because people might not want them as much in the next couple of years. It might get
easier to get those jobs. I agree with you. I think it's been so artificially magnified through social media, through all of these different other companies that look like us who have basically been taking advantage of the fact that it became so prestigious to pursue these roles. And so we are going to market to everyone, who thinks they want this very narrow path without educating them about the broader field of opportunity. Because if you only educate them about this path, at the end of the day, 99% of them aren't going to get the job. And then what? Right?
Yeah.
So at least you should know what else is out there. So you can be coming up with plan B and plan C and plan D, even if being on a private equity deal team is your like end all be all dream, which I would argue you simply probably don't know that at the age of 17, 18, 19 when you need to theoretically make that decision. Right. So back to desks that tend to feed into other desks. We get asked a lot on the investment banking front. Is there a best industry group to go into? Kristen, what would you say about that?
Well, back to what I said before, which is it really just depends on what your goals are. And actually, I want to take a step back because in the banking world, there's sort of two buckets of group types. You have what's called industry groups, and then you have product groups. So the product groups tend to be your M&A, financial sponsors. And technically, I think that capital markets is it's weird because it's like a division. And then within that, project finance is considered a product group. Converse is considered a product group because something that's like a specialized way of doing a deal. Industry groups, on the other hand, are literally exactly what they sound like. Like you specialize in a certain industry. So you become like the expert. You cover the companies, the CEOs, the CFOs related to consumer retail, right? You cover the CEOs, CFOs related to power and utilities. And so as you're thinking about, okay, like what is my ultimate exit? All of those groups in banking, with the exception of some of the capital markets roles, those all kind of feed into like, again, a private equity type path or a hedge fund type path, which is the two sort of most common exits. In all of those cases, you're getting the main skill set, which is going to be the modeling, which is going to be the valuation. You're learning the same things. It's so funny because, again, in sales and trading, it is such a varied experience. Banking is not. The only one that I would say is sort of off on its island a little bit is what's called the Financial Institutions Group, or FIG. Mm-hmm. And again, the reality is you're still learning about like doing M&A deals and valuing businesses and building models. Banks are just a little bit different. Like there's all these additional rules. Like I think it's almost like you're getting even more training. But for whatever reason, our friend Anish was like, it's like you get a tattoo on your face if you go into FIG. So it does potentially pigeonhole you a little bit more. But for the most part, every other group is kind of, I want to say created equal because again, there is like a hierarchy. M&A is definitely seen as like the most prestigious, usually. Again, financial sponsors also, but maybe a little bit less because again, of the exit to connect sort of the golden private equity. But again, within industry groups, it really, I think, depends more on the bank and who is the best group to work for? Who do you want to be sitting next to? And so it's more of that than anything else. And again, at the end of the day, like it's kind of all the same. Like you're not handicapping yourself in any way if you choose one group over another. The exits are all pretty good because, by the way, if you think about like, I want to go into private equity, there's going to be private equity firms that specialize in consumer retail types of deals, right? There's going to be private equity firms that focus specifically on power and utilities, right? So if you really care about some particular industry and you really want to become an expert in that, that's where you might say, hey, I want to go into XYZ group. But again, I can tell you at Morgan Stanley, getting into GPUG, getting into transportation and like financial sponsors and then M&A were probably the most difficult because of the reputation, both from sort of the exit standpoint, like quality of life in M&A was probably the worst. But with the other ones, it was more about just the quality of the team.
I think also you brought up a really important point, which is the concept of the exit in the first place. So, investment banking by and large is really seen as this 2-year program that most people exit out of.
The majority of people do 2 years and then we'll go on to something else. That does tend to be the norm for the most part. If you are in business school, you have an MBA internship and then you get the associate full-time offer, most likely you are staying until MD. Like you are working your way up through the ranks. That tends to be the path. Usually again, at the analyst level, people use it as a stepping stone and then they decide they're going to leave. That is not true at the associate level. I also would say that it is a lot harder to exit at the associate level. It is not that conveyor belt type thing. Like you are not going to be getting the overtures from those private equity firms the way they're clamoring for those first year analysts. I don't know why, but it's a very different structure. So people who go into banking as an associate are usually doing it as a career choice. So it's a very different mentality.
Well, think about it this way. Most people coming out of an MBA have had another career already or have some work experience. It is very rare, like you went straight out of undergrad and at 22 got your MBA. You typically had some other work experience. So you may be a career switcher who said, you know what, I did whatever it was and now I want to be an investment banker.
And we have a conversation with someone exactly like that tomorrow. We're literally interviewing someone who's the head of healthcare banking at Goldman Sachs, and she came out of an MBA. So, I mean, there are, so many, again, wildly successful people who come do the MBA thing and then work their way up and become very, very senior. But it's a different mentality. Like it's a different mindset, and people go into it knowing they're in it for the long haul.
Even those who exit investment banking after 2 years may not exit the investment bank altogether. I have several friends who went through a 2-year analyst program, became an associate, and then moved into private wealth within the firm or different areas of the firm. So it's not necessarily this prescriptive, you got to be out after 2 years thing.
Well, and I want to also make one more quick point, which is I think that the mentality of people that go into sales and trading, it's not exactly, banking, the mentality is people go into banking as an analyst and then they want to go on and do something else. I think that people who go into sales and trading, it's a little bit different. It's seen as more of a career. Again, the hours aren't necessarily as brutal. I mean, the pay is great. And as you've said before, banks are not recruiting in sales and trading out of an MBA program. So if you want to be, a senior trader at a bank, you need to have gotten your foot in the door as an analyst. So it's definitely different. There has been more of, we've seen this exit from the sales and trading world to hedge funds more so than when we were starting.
Let me be clear. I think what has happened is that the investment banking mentality has bled into the world of sales and trading. So now you get people who are educated in the world of like, oh, you work at an investment bank and it's 2 years and then you exit to something. So they are entering into sales and trading with that mentality. That is not how, historically speaking, most people came through sales and trading. And that's not how the recruiting timeline is typically set up. So there is no similar formal, oh, you've been here for how many days? Like now you've got 25 hedge funds, all whose applications open to you. It simply doesn't work that way. Sales and trading is a much more organic thing because the reality is the job looks very similar, especially if you're in, say, a trading seat at an investment bank, to what you might be doing as a risk taker on the buy side, right? But your pay at that level is very, very, very different. You go from making, whatever it is. If you're a senior great trader, you could be making a couple $1 million a year to the potential to be making tens, if not maybe even hundreds of millions of dollars at a hedge fund. So you have to be one of the lucky chosen few in that sense. But there are so many other buy side opportunities, whereas from investment banking, yes, there are so many other, but again, there's also at least what's broadly portrayed as a very narrow set of buy-side opportunities for investment bankers. From sales and trading, again, you take our course, I will literally list out all the different clients you cover. It takes me 12 minutes in the course to go through all the different clients because there's so many different clients who need these services. It's not just oh, well, you're a tech company or a retail company. You're just a fucking company, okay? Pardon my French. But you could be a pension fund, an insurance company, an asset manager, blah, blah, blah. And by the way, nobody talks about these roles, but there are super sexy, high-paying roles at all of these clients. They're not looking for someone who's 23 years old and is oh, okay, now you passed the test. They want to build a relationship with you. You need to demonstrate your competence, and you need to make that switch organically.
Yeah. Well, it's funny because one of the reasons why I think there has been more of a push to go to the buy side where that was not as much of the case. But the difference is that because when we started, it was pre-2008, we talked to Pete Muller, who was you
could be a prop trader.
You could be a prop trader making.
You could run a hedge fund within an
You could run a hedge fund within a bank, which is obviously not exactly the case.
You can't do that anymore. For better or worse. So 100%. So again, the gamification of the desk placement in sales and trading still happens, but let's be clear, you could rotate through 5 different desks during your summer in sales and trading and maybe get an offer to join one you didn't even rotate through, or you get an offer for one or whatever, and you go work there for a year, 2 years or whatever. And then it's not like, oh no, I was on the wrong desk my first 2 years. Then you should go work at another desk. Like you can make a whole career out of it and get paid extremely handsomely and be just fine. There is much less up or out. Now, most sales and trading programs, it totally depends bank by bank. Most are 2 years and then promotion to associate. There are some that have third-year associate programs for sales and trading. And I know definitely for banking as well, some have that. But back to the internship. So, I mean, listen, it's what, 10 weeks, right? It's a 10-week long interview for a future job offer is really what it is.
Yep.
And you have to be on that whole time. You need to treat every single person that you meet in that seat. And by the way, treat your fellow interns this way too, as someone who might control your entire career in the future. And listen, that sounds really dramatic, but I think that that's kind of what's missing these days from the perspective. It's what the people on the desk expect of you, but maybe it's not what you think should be expected of you. I'm just telling you, this is how it is. You can choose not to listen to me if you want, right? You can be like, I'm getting paid $10,000 to do this work and not more. But if you don't treat it as a 10-week long interview, you will not be getting a return offer. If you don't go out and proactively network within both your intern community and also the people on the desk, that's who you should be focusing most of that effort on. But again, to Kristen's point, right? The people you're interning with are also the best and the brightest, and your paths are likely to cross again in the future. So it behooves you to make strong connections there.
Yep.
If you are not getting coffee chats, if you are not saying, hey, listen, I've been on this desk for a week, I've completed all the tasks for the day, it's 6:30 p.m. I actually ran into a VP who's over on this other desk who said, maybe we could chat for 30 minutes and I could just learn a little bit about maybe how these two things fit together. Would that be okay if I went and sat with them for a bit? If you're not doing that and taking that extra step, doing it all in the framework of being socially aware, respectful, and courteous, and I know that it should go without saying, but like somehow it's getting lost, you will have left it all on the field. If you don't get an offer after that, that's also okay. If you did all that and you're like, you know what, I did. And everyone was like, you know what, this person was so highly motivated. You were so amazing. You did a phenomenal job. No notes, but for whatever reason, you just weren't the right fit for any of these desks. Chances are that firm will be like, let's stay in touch. Like you'll continue to stay in touch throughout the full-time recruiting season. It's funny, right? Like I actually got asked to interview for other divisions within Morgan Stanley after not getting the return offer to go be a fixed income analyst, but I was like, bye. And I went to work for them eventually. Like I then worked for them for a long period of time down the road. And I ended up being hired by one of the people who didn't give me an offer at the time because they were like, you're fine. But like, we already chose another intern for our desk. You rotated with us last. And you, by the way, did kind of suck. So like, it's totally fine. Right.
Yeah.
So as much as it feels like it's all life and death, it truly isn't. Okay.
Yeah.
This also can be such a fun time. Again, you came to visit me during my summer internship. I mean, I probably had more fun with you than I did during my summer internship, but like, it's an exciting time. Generally speaking, you'll either be in like a really cool, exciting city or be surrounded by the smartest people you're ever going to meet or both. Go ahead.
And sorry. Yeah, no. And by the way, plug for one of our very early episodes where we literally did a like how to survive New York City, which it was like just like a fun episode because New York has so many nuances. It is expensive AF, but definitely check that out because that was a really fun episode. It was like all about like how
wrong in that episode. Which
well,
is
no,
also
the one thing that we got wrong is we misspoke and said, I forgot if we said it was Park or Fifth Avenue that divided Manhattan. And now I don't remember which one it is anymore either.
Basically,
this is so sad.
Couldn't get Manhattan geography right, which is just like truly tragic.
And I also lived there for 17 years and still own my house there or my apartment.
But yeah, so hopefully this was like a good crash course in like the do's and don'ts of your summer internship. We're rooting for you guys. Again, we have a wealth of resources, both free, okay, and paid. So like to Kristen's point, if you are sitting on the desk and you're like, gosh, I just don't know, right? At this point, I hate to say it, but like the world is your oyster. You kind of have no excuse, right? So on our website, we have every single podcast episode. We have deep dives on like specific topics. We have paid courses that are self-paced where let's say you work for a firm that like doesn't have a great training program. You can go take our self-paced course and be like, hey, you guys didn't do training. Like maybe you can reimburse me for this course. Right? They want you to learn, right?
Yeah.
So there's so many different ways to get up the curve. We are here to help in any way we can, and we're rooting for you guys. And we hope that you all have a very successful summer, and that we're hearing from you that you all got return offers and everything went great.
Awesome. All right. Well, thank you so much. And by the way, we are doing more of a push on YouTube. So if you are listening to the audio version and you feel like watching Jen and I, just again, it's not very exciting. It's not like we're, dancing on the internet or something, but we are here. Actually, that's true. You can find videos for that. Yeah, seriously. So if you do want to, definitely subscribe. And regardless, we will see you next week. And again, for all of you guys, I swear we get at least a message a day asking about industry. We're going to try to get that up and running again, hopefully in the next week or two. So.
Given I spent all morning recording videos for our course and none of the videos saved and the files were corrupted, maybe we should just go back to the industry podcast and I should just give up on our sales and trading course. And
I think you'll have a lot of people that are sad. We get asked about that more than anything, which is yeah, especially because we have the banking one out. But anyway, guys, thank you so much. And happy May. All right. Bye.